Good morning, Johnny.
Morning, Albert.
Today we are talking about goods in transit insurance, and I think it's quite an important insurance. You see all these vehicles on the road. Actually, it's more important than that. Everything that you see on a shelf when you go into Pick and Pay or Checkers, everything gets transported. Johnny, why is goods in transit so important?
Morning, Albert. Yeah, as you just mentioned, I mean, even when there's sometimes a transport strike, and it affects absolutely everything. We don't even realize all the millions of trucks on the road every day. So obviously they need insurance. Goods in transit, it's not just for those big trucks; it's for your small business as well, where you transport stock or customer goods. Um, this is basically so if you take out that insurance and that truck or vehicle gets into an accident or there's a fire that breaks out, so it's fire, collision, overturning, and theft following, and the goods are damaged whilst in transit, that policy will kick in.
Yes. Who needs this goods in transit? You see all sorts of vehicles on the road. You see from a small bakkie carrying goods up to a very big truck. Who needs that goods in transit?
Well, basically any business that goes quickly sends a driver, to pick up stock or buy parts or take a finished product to deliver to a client. Courier companies, even these guys that do take a lot and those sort of things. As soon as you transport goods, might not be finished goods, like I said, it could be stock, it could be parts, and it gets into an accident or whatever the case might be, and it's damaged. That's where that policy will kick in. So most companies, unless you're really like an office risk or you do an online sort of thing, the moment you have a physical part, you're most likely going to transport it at some stage.
My company needs stock, and I phone somebody and I want them to deliver it. Whose responsibility is it?
Well, that would depend on the contract. We're seeing a lot of with courier companies as well, where they're taking a lot of the risk off themselves to say to the client, if you want us to courier this thing or collect this thing, you must take out your own insurance. So that would purely depend on what sort of contract you have with that courier or whatever. If will they take care and custody and control of that package, and will it be covered under their goods in transit, or would you have to have it under your policy? So always good for the clients to check, ask those questions to the courier companies or the company transporting their goods, if it's not their own company, and just make sure there's no gap in cover between the two companies.
Yes, I always advise clients to have a service level agreement.
Mm.
So whose responsibility is it? Especially if you've got a long-term relationship with somebody. So you just phone them up and say, deliver stuff for me. And they say, okay, and they, they load the stuff and they bring it and they send the invoice. But nobody agreed on whose
Mm.
responsibility it is to transport those goods. Johnny, am I right? Who's
Yeah, no, spot on, Albert. And you can't just assume, that they've got the goods in transit covered. There might be an exclusion on their policy or whatever the case might be. Rather ask those questions. Make sure you've got something in place. Like you say, you can't ask for it when it's a claim stage.
yes?
Ask those questions beforehand. Then at least if they don't have, you can always approach your insurer, sorry, to get the right covers in place.
Okay, so our client now has got a goods in transit policy, and my example happens. If the policy says goods belonging to the insured or for which he is responsible. So let's say I get you to deliver stuff to my business. I've placed an order. I haven't paid for it yet, and it's on the way from your warehouse to mine. Whose responsibility is it?
It would still be the company that's providing that item because even though the client's not paid for it, it's goods basically that's
It's
uh,
not
yeah that's
taken.
basically on its way to being delivered. Even if you're transporting, even if the client has paid already, you're still in your care, custody, and control. So you're still responsible for
All
that
right.
item. We know how the couriers and stuff sometimes work with the packages and stuff as well.
Yes.
So I mean, yeah, and how they drive. So it's not far-fetched that they could get into an accident. If you've got 10, 15 packages not really tied up inside, you can imagine what happens to those items. Um, you know,
Okay, let's just turn it around. So I am the client and I am insured. I've got a proper goods in transit policy in place, and I get an order from you. You want me to deliver stuff to you. So the moment that I upload it onto my vehicle at my premises, it's covered until I deliver it to your premises,
yes, yeah, that's correct. Yeah.
even if I use a courier.
Yes, yeah, you must just on most policies, you must just actually advise the insurer that it won't just be your own vehicle, own vehicles, that you might use a third party, and they might actually charge a bit more premium for it. But most of the
Yes.
times, it's assumed that it's your own vehicles that you're transporting. So the moment you use a third party company or couriers or something, you must just advise your insurer, and they will most likely charge a higher premium or a higher excess, whatever it is.
A lot of insurers have a questionnaire. I
Mm,
think I think the policy refers to road, rail, and air.
yes.
So within the territorial limits of South Africa, but it actually means the SADC countries. Am I right?
Yeah, that's correct. Yeah.
So if I send something to Namibia, or if I send something to Mozambique, Zimbabwe, Botswana, Malawi, I don't know, the SADC countries is all the countries around South
Yeah.
Africa.
Yeah.
The types of cover. So I think there's two.
Mm.
Johnny,
Yeah, so effectively, Albert, you've got two, like as you mentioned, you've got restricted cover, which is just fire, collision, and overturning. It's very simple, as the word would suggest. If the vehicle catches fire and the goods are damaged, um, if it gets into an accident, obviously, and it's damaged, and if the vehicle or truck capsizes or overturns, what you want to call it, and the goods are damaged. So that's the cheapest version. But most clients would take the all risk option. That's fire, collision, overturning, and theft following. Because we know what happens is if that truck, you see it sometimes where the truck overturns and then people from the street come and they loot the
I looked at.
equipment. So it's not just the actual physical accident that you've got damages. Now you've got people running up and taking goods for themselves. Yeah.
And all risk. I mean, there's all risk damage as well. So
Yeah. Yeah, that's the all risk one, including the theft element.
theft.
Yeah.
Okay. So my truck goes up the what's that big pass there at Peter
The infamous one. Yeah. Yeah.
So it's in first gear going uphill, and I've got these people jumping on the back of the truck and they start stealing stuff from the vehicle. Is that covered, Johnny?
Just offhand, no, I don't think that would be Albert because it has to follow the fire, fire collision
One
and
of,
overturning. So, in my opinion, no, that would not be covered. People just tagging along and quickly offloading or almost like hijacking it while it's still sort of in transit. Oh yes, and just to mention that actual theft and hijack of the actual hijack would also be covered. So if your vehicle is busy being transporting goods, and obviously somebody stops and takes that truck, obviously the goods will be gone. So that would also be covered under the all risks portion. Yeah.
yes. And then political riot, of course. So if the vehicle, we see it often when there's a riot going on, they stop the trucks and they set them on fire.
Yeah, with the goods inside, or they loot the goods. Yeah.
Yeah. Premium on the goods in transit is always difficult. It's expensive. So they work out the premium on the annual carry of so how many loads do you carry per annum, and according to that they work out the premium. And then the excess structure, tell us about the excess, Johnny.
Yeah, so normally you would have a basic excess, which is for your fire and accident portion, and then you would have a hijack theft excess, which most of the times you're looking at it's quite high, you're looking at about 15% or so of the value, because obviously that's the biggest risk. Yeah. And then I just also want to mention, Albert, that you can obviously, you don't have to have a goods in transit policy where you pay monthly. If you're not somebody that transports often, but now you have to transport something quickly, you can do a once-off as well, where you give the information to the insured, say, this is where I'm going, this is the goods, this is where I'm traveling to, whatever the case might be, and I'll charge you a once-off premium and just for that event, yeah.
Yeah. It happens often that our clients are insured for a limit, and then suddenly they transport something big or a huge load, then they let us know,
Yeah.
and we increase the sum insured for that specific load,
Yes. Yeah.
and they reduce it again. I'm just thinking the type of goods that's transported, that's got a huge effect on the premium. So insurance company look at what the company is actually transporting, and then they charge a rate according to that.
Yeah, that's spot on. So what they would normally do is, Albert, is they would look at volatile goods such as tobacco, alcohol, firearms, explosives, those sort of things. Would most of the time, I would say no to it, or it would be a hell of a big premium with big terms and conditions attached to it. So, and obviously copper wiring or electrical wiring, stuff that might be prone to being hijacked, but people might hijack the truck or loot it afterwards. Yeah.
Yeah. So to summarize, I think we can divide the goods in transit into two. So we've got the client that transport their own goods. So they manufacture stuff, they've got a truck,
Yeah.
they go and deliver and fetch stock for their own business, and they're totally dependent on their own transport. And the second one is the transport company, and that's all those trucks you see on the N1 going to Cape Town and the road to Durban. A transport company that carry goods on behalf of somebody else. Johnny, can you elaborate on that?
Yeah, no, spot on, Albert. So it's just depending on what your business would need. So if you're just a small little one-man business with a bakkie transporting finished goods to a client or picking up stock every once in a while, you can still get it. And if you're obviously a big transporter, you would most likely have a really specialized transporting goods in transit sort of policy. But yes, it can be catered and structured depending on what your business needs.
Needs. Johnny, any questions from your side?
No, but I think just when in doubt, I always say to the clients, when in doubt, ask. If you're unsure, ask those questions. Like I said, you can't ask those questions when you're sitting next to the road and the driver vehicle has capsized or overturned and now you haven't taken out any cover. Then it's too late to ask those questions. But no, when in doubt, ask the questions. Yes, the premium is a lot. The risk is a bit more than your because it's a road risk basically.
Yeah.
But yes, structure it correctly and check the excesses. Make sure that you've got the terms and conditions down. And then should there be a valid claim, the insurers will pay it out. Yeah.
Yes. Thank you, Johnny.
Thank you, Albert. Thanks for having me.